Hello everyone and welcome to the channel. My name is Brent and in today's video we are going to be doing our stock market weekly recap for the 3rd to the 7th of May 2021. This will be week 18 changes in the market. We're going to go ahead and kick off the video by taking a look at last week's changes up on the screen now. Then we're going to dive into the 4 main indexes, take a look at their performance for this past week. Were they up, were they down? Then we'll go ahead and take a look at cryptocurrencies. What did Bitcoin, Ethereum do this past week? Then we'll go ahead and take a look at the entire S&P 500 performance for this past week. What stocks individually were up, what stocks were down, and then we'll take a look at oil, dollar, silver, gold, bonds. I want to go ahead and show you guys something special with gold. It's breaking out of its 5,200-day range, and it does look like it's, moving higher. There was an article somewhere out there, I was trying to find it, that was talking about the Fed buying up gold in order to drop down the rate. I couldn't find the article, but that was something that I had read this past week. So I think it's something that's very interesting and why I'll be bringing up gold a little bit here in a chart, kind of showing you guys. And then we will take a look at bonds and the 10-year yield and current mortgage rate. So with that said, if you are brand new to the channel, have not yet subscribed, go down below. Hit the red button to subscribe, make it gray, hit the bell to be notified every time we release a brand new video, and of course give this video a thumbs up, make it blue, and let's go ahead and get into the video. Okay, so right now we're going to start off by taking a look at week 17 changes this last week. So last week the markets overall were essentially flat. S&P up was positive by 0.02%, but we can see that a lot of the, market was pretty red outside of financials and energy. So energy, we had Exxon and Chevron. I believe they were up around 3 or 4%, so they were pretty positive on the week. We saw financials overall pretty positive, but we saw a mixture of tech. Microsoft, Apple, Intel, Pfizer, Texas Instruments, Tesla, they were all negative, whereas Google, Facebook, Amazon, Disney, Netflix, they were positive. So there's a mixture out there between the tech, the big FANG stocks. So, and healthcare also had pulled back slightly last week outside of AbbVie, who I think they had earnings on Friday that were pretty positive. So they kept pretty positive on the week itself. Most times when companies had released earnings, the company had dropped several percentages that week. AbbVie actually did pretty well. Okay, and we saw the Dow Jones drop about 0.5%, NASDAQ drop 0.39%, the Russell 2000, of the negatives, it only fell down 0.24%, so about 0.25%. Bitcoin was at $58,000 at the time of this recording when I snapshotted the markets. Silver was down 0.56, gold was down 0.44, and bonds were down 0.38. So those are the other statistics right there. Now let's go ahead and jump into what took place this week. So we had the S&P 500 this week up 1.23%. Overall, pretty positive. We can see here on Tuesday, a bit of a downer, down 0.67%, but we quickly recovered here on Thursday. Thursday, we had the job numbers. I believe they had missed with expectations. That was positive in the market because they had missed expectations on their unemployment numbers. That means that the Fed is going to continue to keep rates low or continue to suppress rates low. So I did read an article out there, I couldn't find it, about the Fed coming out discussing, they may see an uptick in inflation, but they're trying to work it. And I thought there was something out there as far as them buying up gold in order to kind of help suppress that. So once we get to gold, I'll go ahead and show you some charts as far as their 200-day, 50-day moving averages and how they recently broke out of their downtrend. Okay, so that is the S&P 500 up 12.69% year to date. The Dow Jones positive across the board every single day, up, and away, up 2.67% over the past 5 days. This is up 13.63%. I believe the Dow Jones is still in second place. We have the NASDAQ right now down for the week by 1.51%. So negative. Big hit there on Tuesday. So whereas the S&P 500 and the Dow Jones were pretty positive on Monday, the NASDAQ completely hit hard, down 0.5%, and then down nearly 2% on Tuesday. So big whacks across the board. It tried to make up a little bit of it for Thursday and Friday, but overall ended the week down 1.51%. So we'll see as we take a look at some of the tech companies within the S&P 500 heat map that we're going to show, why the Nasdaq was down as hard as low as it was. Year to date it is in last place, up 6.7%. And then we have the current winner year to date, up 15.03%. We can see the Russell 2000 is still maintaining most of their gains that they have made year to date. They have had a couple months, where they've just been kind of downtrending, or not months, but weeks. They've been kind of downtrending for quite a while. I believe last week they had a positive week, and then this week here they had a slightly positive week. So they're, they've been trending downwards. They're gaining some support. Now they're kind of trending sideways. So we may see the Russell 2000 either trending sideways for a while before. I think this week coming up, we have a lot of the small mid-cap businesses releasing earnings. But we may see the Russell 2000 go positive this upcoming week because of that. But overall, the Russell 2000 is in first place year to date. Okay, so let's go ahead and jump over and take a look at the entire S&P 500 performance for this past week. And then right after, we'll take a look at crypto. Okay, so we are looking at the 1 week performance right now. We can take a look really quickly why the Nasdaq was hit as hard as it was. We can see Tesla down a massive 5.22%. Amazon down another 5.07%. Netflix down 1.88%. Google down 0.07%. Microsoft, essentially flat. Apple down nearly 1%. Facebook down nearly 2%. So right there, Nasdaq across the board got hit down 1.5%. Because many of those FANG stocks were just negative on the week. Pretty hard here between Amazon and Tesla. That makes up a good percentage of the Nasdaq index. So to see the S&P 500 pull ahead as much as it did, where technology makes up 23, I think it's 23%, or maybe it's 33%. I think it's 33% of the S&P 500 is tech stocks, and of that 33%, 25% of it is the FANG stocks within the technology sector. So we can see that the S&P 500 was essentially carried by, financials, JP Morgan, Bank of America, Citibank, Wells Fargo, Berkshire Hathaway. Take a look at healthcare. So Johnson & Johnson up 3.55, Eli Lilly, AbbVie, United Healthcare, oil up massive over there, Exxon and Chevron up 6.74, 9.07. So the rest of the market essentially held up these tech stocks. And where tech fell, we had financials, healthcare, and energy kind of picking up the slack. And that's what popped the S&P 500 up a little over, 1.5%. We also saw UPS and FedEx, so those logistical companies, popping really nice as well. I don't know if that's Expedia down there, EXPD. That may be Expedia. I'm not familiar with that ticker symbol. So that's pretty interesting there as well. So very nice, very nice. We can see real estate investment trusts not doing so well, and utilities. I did post over on Facebook here. I did post a snippet of here. I think it's this one right here. So yeah, energy up 8.58%. So this is the S&P 500 up 1.23% on the week. But if you broke it down by sector, energy was the biggest contributor there. As we can see here, Exxon and Chevron up really nicely, nearly 7% there and 9% there. So energy was number one, followed right behind by materials. So materials. So if we swing back over here and we take a look at materials, I'm not seeing it right off the bat. I would assume it's down here in this area, but I don't see any. Oh, down here, basic materials. So we see materials down here pretty positive as well. Freeport, McMoran. I am not familiar with that, but that is up 16.6%. So materials were in second place, followed right behind by financials. So we already saw financials popping as well in healthcare. So interesting. I thought healthcare would have been a bigger chunk there. It's up 2.26 of the S&P 500. So maybe S&P 500 doesn't have a lot of help from healthcare. but I thought healthcare made up a good sizable portion of the S&P 500. But overall, we had energy, number one, materials, number two, and I think industrials and healthcare as, number 3 point. So that is the movement there with the S&P 500. Okay, let's take a look at cryptocurrency. So Bitcoin this week up positive just slightly. It started the week a little over 58,000. It's ending the week here at 58,944. Ethereum at 4,100. Dogecoin 55 cents. So I know after SNL, that was a couple articles floated out that it had crashed 20, 30% after, Elon Musk coming out on SNL. SNL overall, I was watching the live event over at Andre Jick's channel. So he had a live stream going. We had a couple other friends along, and I was tuning in off and on as I was, having dinner and hanging out with the family. But we're watching the event and taking a look at Dogecoin. So it did move up slightly on the day. I think it had lows in the 30s. So it's made up a good portion of that kind of bouncing back. So it's kind of, I feel like that 55, 60 cent range, if that is true, that seems pretty stable for Dogecoin. Cardano, $1.81, and a few others. So on Monday, I actually have cash that I'm moving specifically for cryptocurrency. So I've been discussing with my wife. I felt like we haven't put a big enough interest on cryptocurrency. So I'm going to be buying using Gemini. I have a video that I'm going to be recording, kind of going over the account process of opening an account over at Gemini, why I chose Gemini's platform overall to be my buy platform, and then I'm going to be moving the cryptocurrencies that I do buy over onto BlockFi. Okay, moving over into oil. Oil up this week. We already saw energy up 6 and 9% between Chevron and Exxon. So we can see oil up 2.68% on the week. Year to date, it is up 34.6%. The dollar trending lower this past week. So we started the week at $91, lower throughout the week. Fed numbers, unemployment came out on Thursday, as we kind of discussed earlier. Numbers missed. That means that the Fed's going to be continuing to keep the dollar really weak. And by, how they're going to be doing that is keeping rates suppressed. Right now, rates are pretty high. We look at the 10-year yield, it's at a 1.6. It has been trending lower since these past few weeks. So we started last week, it was at 1.625. It is now at 1.6. That's pretty high still. Silver up 6.04 this past week. Year to date up 3.62. And gold up 3.58 this past week alone. Year to date, it is down 3.8%. Okay, now here's where I want to show you, the gold trends and the silver trends. So right now, all I'm showing here is get rid of that one. And I'm just going to go ahead and show you the price. So gold's been trending downwards since, August 20th, August of 2020. So gold had a high of nearly 195 and has traded all the way down to these lows here in April. Now recently, gold broke above 200-day moving average. So here we have the cross between the 50-day, 200-day moving average. We had a double dip take place here prior to, in March. We had a double dip. So we had some support being formed here for gold, and it started trending higher. Here, it recently broke out of the 200-day moving average and above the channel. So we may see gold move higher. We may see some resistance in the 180s, but if it does break 180, we may see it push back into the 190s once again. So that is just something that I had seen here recently. And with the Fed wanting to keep those rates suppressed, I feel like they may make a trade at buying up gold, and that may be why gold is moving here in the upwards direction. And we have bonds up 0.12% on the week. Year to date, it is down 3.21%. Either way, I've never been a fan of silver and gold just because, you know, you don't actually physically own them. Same argument could be made for cryptocurrencies. You don't essentially hold it. It's not physically there, something that you would hold, but there's a use behind cryptocurrencies, and just I haven't touched it, or I haven't actually purchased any of it in the last 10 years that I've been kind of watching it develop and grow, and it's something that's not going away. It's here to stay. It's becoming more mainstream. There's more companies that are buying it. There's more hedge funds looking at it. There's more financial institutions using it and purchasing it. And there's actually the European, if I think I posted it right here. I guess I should have talked about this in my news article. So the European Investment Bank issued 121 million digital notes using Ethereum. So here we have an European bank issuing out banknotes, savings bonds backed by Ethereum. So I think this is really interesting. So if all these big institutional, these big banks, these big institutions, these big businesses are moving into cryptocurrency, why as retail investor, why am I not at least taking some risk? But in the grand scheme of how much I have invested across, the stock market or real estate or other investments, that's going to make up a small portion of that. So it's essentially really good to take some sort of a risk, especially when it's something that I know is going to be around for quite a while now. I don't see cryptocurrency going away. It's here to stay, and I just want to be invested in it and see where it's at in the next 5-10 years. I have no doubt that it'll be much higher than where it's at right now, especially if other banks and institutions start getting into it and seeing the value of it as a backing for other digital notes in the future. So I thought that was pretty interesting. So hedge funds were the net sellers for the fifth straight week and the fourth week moving average of hedge funds. So over the past 4 or 5 weeks, hedge funds have actually been more sellers versus buyers. So right now the market's been kind of trending sideways, not really moving to new highs, but again, not really moving to new lows. Institutional investors were net sellers for a third week in a row, but retail investors, me and you, the normal investors, have been the most resilient group, as we have been the buyers for the past 10 weeks in a row and the only net buyers for the third week in a row. So hedge funds, institutional investors haven't bought a single thing in the past 3 weeks. So the whole market here has been essentially keeping where it's at because of the retail investors. So that was an interesting article that I floated out there. So mortgage rates fell by 4 basis points to 3.16 from a week ago at 3.2%. So that is essentially all I wanted to cover. So what I posted over on Facebook this past week, started here with our recap of last week. We also went over companies that are going earnings this week. So this was last week. So Pfizer released earnings last week. I think this week the only company that I'm looking forward to is Tattooed Chef. I do own 200 shares of that one. Where does your average wealth sit? So here, this chart shows you your average wealth by your age group in the United States. So looking at this age chart, I'm 35. Is my average net worth at 274? Or is my median net worth? So the average and the median, just kind of there. I'm going to be 36 here on the 19th of May. I'll actually bump up into this age group. So if average there. And we had April dividends. So I only track my dividends from M1 Finance, but we'll go ahead and share a website that I recently came across that I'm going to be going ahead and use. I actually put all my stocks into it, and we'll make a video kind of covering all the dividends that I do make from my portfolios. But this account right here made $109.14 in dividends. So I thought it was a really good month, a little over $100 from that account alone. We have, we already talked about the hedge funds, power of leverage. So if you have $100,000, it may not be in your town right now where you can pick up a $100,000 home for 20% down. But if you look outside of your neighborhood, outside of your city by 2 or 3 miles in the range, you may start to see some up and coming cities that have houses selling for, $100,000, a hundred and some $1,000. So I know that was the case a couple of years ago. Me and my friend, we may live in a sort of medium, larger style city, but when we looked outside of our city, up and coming cities, we saw homes that were valued in, I bought a duplex for under 80,000. I bought a single unit at 90,000, and he bought a couple other ones in that $100,000 range. So we bought a couple houses during this time frame, and those houses are now valued at 160, 170. They basically doubled within the time frame that we added value to it, and just appreciation over the last 3-4 years. So I wish we would have bought more in that time frame, but because of 2020, we were saving up to buy our new home, which we have recently moved into within the last month. I just couldn't buy any more real estate at last year, just because we had our home being purchased. I didn't want to make any quick um, risky investments accidentally and lose some of our cash that we needed to put towards a down payment. So that was some of the things that kind of halted our real estate business back in 2020. And yeah, BlockFi answered out my question. So I essentially sent them an email saying, hey, if I transfer money into my BlockFi account, does that essentially count as that first interaction? So here, if I transfer $20,000 from Coinbase or Gemini to BlockFi, would that count as my first time deposit? And essentially they said that any deposits of any size made by either ACH, wire, crypto transfer in the same month that you signed up for BlockFi, and you hold it there for the daily average balance for that first month, and then you hold it for 2.5 months afterwards, then you'll get that bonus. So in my example, when I was doing the math here, I did the math here on my personal page. If I buy $5,000 of Bitcoin and 2,500 of Ethereum, 2,500 of Litecoin, and then that's a total investment there of $10,000. And I have it at BlockFi, I make roughly $580.55 in interest. Over a 2-year period, I'll make $1,161 in interest, and that's with just $10,000. And just kind of leaving it there over the next 5-10 years, I'll probably dollar cost average with the interest that it's paying me out, just to kind of dollar cost average along the way. But we'll go ahead and kind of see where those investments go within the next 5-10 years. I think it'll be a nice little something interesting to kind of continue to diversify your portfolio. You never want to stop diversifying, especially when there's new investments. Cryptocurrency in itself is fairly young, but it's something that you can still buy into it right now, and it's still considered young long term. Where is that technology? Where is its use going to be used in the future? So I do see a lot of use there in the future for that. And make money while you sleep. Kind of, different ways that you can make money while you're sleeping. Investing in dividend stocks, creating content on your YouTube channel, selling digital courses or books, peer-to-peer lending, affiliate marketing, rental properties, subscription services, referral programs, selling merch and other products, and running vending machines. So that was a nice little post. And okay, so this is actually this is what's going this week. So this week we have Unity was the only one besides Tattooed Chef that I was kind of looking forward to. Unity, I don't actually own any stock in it, but it is a company that I had. Unity is something I have on my computer. Let's see if I have a shortcut to it. Oh, yeah, I do. So right there, shortcut to Unity right there. I use that to develop all my programs. I used to develop, I always wanted to create a 2D or 3-dimensional game. Back in the past, I had been programming forever using C# and trying to put games together and apps together, and actually created 3 apps for my financial investor channel at the time that I released. I do need to update those apps and kind of reskin them, re-put them for me as myself, Brent Metters. But Unity is a great platform, and I want to check out this company because in the long term, there's very little game engine that really give you the customization and power that Unity does. We have, what's the other one that's fairly popular? I forgot what it's called, Unreal Engine, and a couple other companies build their own engines, but Unity and Unreal are, and what's Blender? Blender's not really a popular one, so I'm going to say with Unity and Unreal Engine, those are the most popular ones. But Unity just gives you so much of an edge, being able to push to iOS, to Android, to PC, to console, just any platform that you want to sell it to or publish to, it lets you, and it's really easy to program on. So I will be checking out Unity there and Untitled Chapter this upcoming week, and we already kind of talked about this as well. And then this website here. So over on Instagram, it was JJ over at, my goodness, JJ Buckner's channel. He had posted a screenshot of his portfolio, his average yield, his yield on cost, and his annual income. And I thought it was really cool. And this is a completely free website to use, trackyourdividends.com, where you can essentially load up your dividends, and it's the best free dividend tracker. So I kind of started putting up my dividends into that, but I'll be kind of putting that more in an upcoming video, kind of showcasing how much dividends we're actually making from our portfolios. And I think that'll be a really nice little share. So that is going to be it for this video. Thank you for tuning in. If you guys are brand new to the channel, go down below, hit the red button to subscribe, make it gray, hit the bell to be notified every time I release a brand new video, and of course give this video a thumbs up, make it blue, and I will see you guys in the next video. Bye bye.